Well, guys, it looks like some on Wall Street are at it again, basically saying that there's somebody out there that is actually 8 years ahead of Tesla. This isn't my words. This is what is being said out there, so let's get down to the truth of it all. So let's dispel all the myths, get down to the truth, because that's absolutely what you guys want in the end. Just make sure you like the video if you like getting the truth without the hype, because that is exactly what you're going to get right here on this channel. Sometimes you guys call me bears because, hey, I'm not as bullish on Tesla as a lot of other folks are. That's because I'm just trying to bring you guys the truth, and not everything is perfect. But let's just kind of see how far off base this is in regards to somebody being 8 years ahead of Tesla. All right, guys, just keep in mind, this isn't my words. I'm simply going to react to what is being said out there in the media and everywhere else. And then we'll kind of discuss the context around this in regards to Tesla. All right, so let's jump in the video here.
Joining us now, Jeff Pierce, Senior Manager of Derivatives Trading for Charles Schwab & Co., is here to discuss both Lucid and Rivian. Leadership at Lucid making some comments, it looks like, on LinkedIn. What's going on there, Jeff?
Yeah, we've got the CEO of Lucid going to LinkedIn, as you said, recently discussing how he thinks Lucid continues to outpace Tesla and other EV makers, saying efficiency is of critical importance to making a better, lighter, more spacious, longer range vehicle, and that directly impacts cost of manufacturing. Therefore, efficiency is arguably the single most valid witness of a company's core EV technology capabilities. He looked at the company, he highlighted, I should say.
That's very interesting so far. So apparently he's thinking they're in the lead in regards to efficiency. I don't know, and he's saying that's how they should be measured. I understand there was a lot of manufacturing nuance in there, but ultimately, in the end, as investors, and that's right, what we're talking about here is as investors, efficiency comes down to profitability. It's another way of saying profitability. And as far as I can tell in regards to Lucid's earnings, that's not what's happening at all. If I could talk properly, what's actually happening is they're not very efficient from a profitability standpoint. Clearly, that's why they have to continue to take on outside investment and are continuing to burn through capital. So I'm not real sure where he's going with that, but maybe there's more to it. So let's kind of hear him all the way out.
5 mile per kilowatt hour, 146 mile per gallon equivalent that Lucid Air achieves, making it the most cost efficient production car to date, or excuse me, efficient car to date. Rawlinson referred to the chart, which compared several rivals, including the Model S, suggesting it would take 8 years for the Model S to reach their current efficiency that Lucid has in their Air Pure. He said that Lucid has a significant EV technology advantage. If the closest competitor were to continue their rate of progress, it would take them many years to match Lucid today. So some pretty strong words coming from the CEO.
I mean,
all right, so let me kind of break that down for you guys in regards to this is CEO speak, trying to spin something positive that they have in regards to over the leader, which is Tesla, clearly. So, and just to kind of understand context here, more importantly, Tesla does not beat everyone and everything. Okay, that's okay. There's no company out there that beats everyone and everything. There's always going to be something that a competitor does better than you. Of course, you can try to close that gap. You can try to get better. And sometimes there's just, depending upon how they want to look at the data, they can just take something that's a positive for Tesla and then turn around and make it a positive for Lucid. That's what you're seeing right here in regards to that. There is obviously the Lucid Air is more efficient than any model that Tesla has out. And of course, if they, keep at their current rate of efficiency that they're using here in regards to efficiency, it'll take Tesla 8 years to catch up. Okay, makes sense, except for I know that they're not just going to iterate on these models. At some point in time, they'll have a big battery breakthrough. There'll be something else that will then push kind of that next level and make that efficiency gain that Lucid has null and void onto the next technology. That is how technology works. That is how it moves. However, he needs something positive to say to his investors. He needs a positive message to go out there to kind of quell investors' deal. You can see in regards to their stock price, it's pretty freaking low. You're in that penny stock territory there, not a place you want to be. So he's trying to give out anything that he can in regards to their investors to show that they are not just competing with Tesla, but in fact, maybe even beating them a little bit. And this is kind of a metric that they can pull out. Now, I'm not here to say, no, that's wrong, it's false. Tesla's far more efficient than that, whatever. We're getting into semantics there at that stage. Okay, Lucid Air can have that. Guess what? In a consumer-driven environment, it doesn't matter. What matters is what the consumer wants. And from an investor standpoint, which is really what matters to us on this channel here, I could care less as to whether or not you prefer a Lucid or a Tesla or a Porsche or whatever. Totally irrelevant. From an investor standpoint, I want profits. I want margins moving in the right direction. And right now, yes, Tesla's margins have gone down, but Lucid is burning money. They aren't profitable. They aren't stacking cash. They don't have a lot of free cash flow. They aren't performing like Tesla from an investment perspective. That's why I wouldn't put my money over with Lucid in the first place, because they're not performing as a company from a financial perspective, which is what matters as an investor. And you got to keep that in mind. Don't get wrapped, even positive things. Tesla could have 500 miles worth of range, 800 miles worth of range. Who freaking cares? What matters is getting those margins moving back in the right direction, getting that growth rate moving in the right direction again, and getting kind of the growth story with Tesla kind of kickstarted again. That's what matters. All the rest of the stuff right here, it's nice. It makes for pretty press releases. It gets people excited. As an investor, I could care less about that. Do I think that would draw more people? Of course I do. It knocks down another one of those barriers, range anxiety that people have. But if it doesn't translate to the bottom line, which is not guaranteed, then it doesn't freaking matter. So you got to keep that stuff in mind.
Interesting commentary from the CEO, Jeff. I was shocked at the way in which they were comparing from a chart of like to Tesla, and I think just right now you're not in a position to be making these claims. And I mean, I seen Lucid vehicles; they're beautiful, they're very cool, and I can imagine that as far as like efficiency goes, sure, but I just feel like these come at a very interesting time when Lucid stock has gotten killed, and frankly, they're not really a competitor even yet to Tesla.
There you go. Even the Wall Street folks aren't buying the story there, so it kind of tells you how kind of far-fetched that it is there. In regards to that, yeah, I agree. I've seen them before in person, been to the little stores that they have. The one in Miami specifically I've been to. They are beautiful cars. Wonderful inside. I'm sure the technology is great. I'm sure all that sort of stuff's great. But we're talking about stocks here, and nobody's impressed, unfortunately. Not even the Wall Street folks who typically bag on Tesla. They're not even impressed or even feel like Lucid's in the ballpark with Tesla in regards to competition.
Not really. I think there's a couple angles to this. For one, this is not the first time we've seen Rawlinson, maybe take a poke at Tesla. He formerly worked for them. He was the chief engineer, worked on the Model S himself. Elon and Rawlinson have clashed over the years. I think the other thing we can look at from this angle is the technology for Lucid. The differentiating that they're doing might be to try to lead to some more partnerships. We're seeing a lot of names like Rivian, match up with other automakers. This is potentially a way to do that. Honda is reportedly considering a partnership with Lucid already. We know they've entered into a partnership with Aston Martin in the past, back in June of 2023. And for a stock that's had a very bumpy year, investors are looking for some relief here. We have seen 2 consecutive quarters of increases on deliveries, record second quarter vehicle deliveries recently. But nonetheless, the cash situation at Lucid is not good, and investors have really struggled to get behind the stock.
Shifting gears here, Jeff, and talking some Rivian, there's some delays, it sounds like they're saying, due to parts shortages in their delivery of these electric commercial vans for Amazon. Look, this is one of those ones where my antennas go up a little bit. Like, is this just the letting off Rivian easy? Does Amazon want out of some of this? Or if it is just simply what is stated here by Bloomberg, it's just a delay, not a ton of harm here. Eventually, these will get delivered.
Getting a little juicy here in regards to rumors of Rivian. You got to see right there, wrapping up the Lucid talk. Yeah, they're burning cash. It's a problem. Investors are no longer buying it. In regards to, you can only string along investors and not start turning the knob towards profitability. You don't necessarily have to become profitable, but investors need to see a path to profitability. Sure, early stages, whenever you see huge growth, huge revenue growth, but not necessarily profitability, because, hey, we're expanding, we're building factories, we're doing X, Y, and Z because we have massive demand and we just can't keep up with demand. Those sort of things, Wall Street's willing to let you not make money and not be profitable for longer. But at some point in time, they got to see a path to profitability, and you can't see declining numbers. Oh, and by the way, no path to profitability as well. It's almost like a double whammy, and it just kind of becomes a simple math game at that stage, even for investors who want to speculate or maybe don't necessarily want to get behind Tesla as much as other EV investments, or maybe even other investments altogether. You're not giving them really anything to go off of there. And that right there is now the problem with Lucid. Doesn't mean they can't turn it around. It just means they're not there yet. And you can hear it from these Wall Street folks who are on Wall Street. They're not buying it either. So if you're going to invest in Lucid right now, it's looking a lot more speculative than it is anything else in regards to that. So you got to kind of understand that. So let's kind of see how this Rivian talk comes out here, because they're doing some juicy rumors. You guys know I don't like to play in rumors, but hey, this is the Wall Street guys, is what they're talking about here in regards to Rivian and Amazon there. And of course, that has a huge impact on both stocks to a degree, but obviously a lot more on Rivian versus Amazon?
Yeah, it's a good question. I hadn't really thought about it from the Amazon angle, and unfortunately for Rivian, delays are not something new. They themselves have had cash issues, but they've seen part shortages along the way. Reportedly, they've halted the line in their factory in Normal, Illinois earlier this month. They did not provide a timeline for when they're going to come back. And the Amazon spokesperson told Bloomberg that the company was aware of the production issues and that was not expected to impact Amazon in any way. Rivian has said that the part shortages across the board in the industry, although they did not specify specifically what parts are the problem. They did say production of the R1 electric pickup and the SUV models remains unchanged, and all employees will continue to work for their 40-hour week. So, again, is this a big impact? Is this something, as you pointed out, maybe coming from Amazon? Unsure at this time. But what I do know is, again, been a very extremely volatile time for Rivian, even since their second quarter report. Coming into this week, Rivian was up about 40% since late June after their deal with Volkswagen. And, not a good time for delays, even though now they've got that excess cash coming in from that deal.
Yeah, so obviously in regards to Amazon there, if you understand how Amazon operates, they are years, sometimes even decades ahead. So it's not like they need these, Rivian vehicles in order to continue on with operations. That they're decades ahead on everything. And in regards to getting these electric vehicles from Rivian, that's part of a much longer, multi-year, multi-decade plan that they actually have play out there. So yes, usually Amazon is ahead. That's the reason why sometimes they traded a really, really high premium, why their EPS isn't as high as possible, because they put the money back into the business, trying to get ahead of what the next trend is, what's going on next. So yeah, I would not suspect that they're all of a sudden operations are going to slow down or impact Amazon at all based upon Rivian having a slowdown there. Amazon is well ahead of all this sort of stuff. So absolutely no worry there in regards to Amazon itself. Obviously, Rivian did get a huge boost up in regards to that VW deal. Obviously, the vast majority of that run, if I had to guess, and you can see it right there on the chart, was just hype. Obviously in the cash infusion as well, meaning Rivian's going to last a little bit longer. They bought themselves a few more years here with this partnership in regards to, obviously we'll see if that partnership bears any fruit or not, who knows, but obviously that right there is where it's trading in regards to that. And hey, 40% run is very, very nice. But again, you got to remember these stocks are 100% trader controlled, and they're basically just hype runs, momentum trades, whatever the case is. There's nothing fundamental here that's pushing Rivian at this time. So you got to kind of keep that in mind as well if you're thinking about buying this stock. There's nothing really fundamental here that we can point to in regards to guidance, future profits, things of that nature with Rivian. They just have not guided to that yet formally.
I guess, Jeff, this is the nature of growing pains. I mean, this wasn't something that was completely unseen at Tesla, which frankly still has its own fair share of like recalls and various delays and production woes. So it's not.
There's your typical Tesla bashing there that usually goes on every time Tesla's talked about on any of these channels.
Abnormal. It just feels like for a name, when you look at the stock and you see where we've fallen, how disappointing this name has been, it's just another layer of like kind of investor mistrust, frankly, in their execution.
Yeah, absolutely. I mean, at this stage, the earnings report was certainly a catalyst for the stock, and we've seen volatility since then. The production numbers were slightly slowed down, but at this stage, earnings aren't as important as sales and cost, right? These delays cost money. The sales are what, investors are looking for. We know they've done a lot to reduce the cost of making the vehicles, including material costs. They've put a halt on their construction of their plant in Georgia. That saved them about $2 billion. They're still guiding for about 57,000 EVs by the end of the year. But hiccups like these are really a big deal for a company like Rivian, who has struggled with cash in the past, sitting at about $7.9 billion in cash. They really needed that funding from their new Volkswagen deal, and that's given investors a little bit of relief.
Also, one of their big investors is Amazon, Jeff. So if you upset one of your big investors, not necessarily a good thing either. But like we said, nothing too crazy yet. We'll see where this story develops. Appreciate it. Have a good weekend. Jeff Pierce, Senior Manager of Derivatives Trading.
All right, so we'll go ahead and stop the video right there. As you guys can see, the quote-unquote competition is not close here in the U.S. It's not in the ballpark. Any sort of that talk is just absolute silliness at this stage. Ignore it. I wouldn't give that person the time of day. However, anybody also saying that the competition in China is not good either and Tesla's just crushing them all over there is absolutely not true as well. That person's the opposite end of the spectrum that you need to be ignoring as well whenever it comes to Tesla there, because that's not true either. That is where the competition is absolutely in China. Chinese manufacturing is just incredible. So you got to kind of learn to ignore both sides of the equation whenever we're talking about Tesla. So I'm not worried about Lucid. I'm not invested in Lucid. I'm not invested in Rivian. I'm just not going to. I don't believe that they are going to be long-term winners. Maybe they turn the corner at some point in time, and maybe that right there will pique my interest in regards to investing, but you got to prove it. And that's the hardest thing, is not trying to guess who the winner is going to be. I don't have to guess. I can wait until a stock proves it and then invest very, very successfully if it's a great company over the long run. You did not need to be into Apple in 1983 in order to make a crap ton of money in Apple over the long run. Same exact thing with Tesla. You do not need to be in Tesla when it IPO'd. You didn't need to be there. You could pretty much hold off for a pretty long time before getting into Tesla and making a whole heck of a lot of money on that. That is the same, and that is true with every single stock. Think about Palantir. I didn't need to be all over the DPO. I could wait until they proved it. And oh, by the way, I got a lot cheaper price too. It's well under $10. After they actually started proving the business model, started proving that they could turn the profitability knob, other things of that nature. And then the stock took off after that. So you have time as an investor. So I'm in no hurry to rush into either of these names if they're going to turn into great companies over the long run, but they have to prove it. And here we are, really, sitting on several years now, and they've done nothing except for go in the opposite direction of where you thought that they were going to go whenever they were all the excitement, all the rage back in 2021. So that's kind of the caution there with that. But laughable to think that there's somebody is 8 years ahead of Tesla on anything that actually matters from an investing perspective. They just aren't. It's not even close right now. So again, hey, some people want to listen to it. I got it. This is why we do our due diligence. This is why we do our work right here. So that way we can ignore that noise and instead buy confidently into the companies that have the most chance of making the most amount of money for us. And remember, if you want to see my buy and sell alerts on Tesla and you want to take 5 courses for free, you want my complete watch list with price targets, including my price target for Tesla, you want to be a part of the best 6, 7, and 8-figure Discord out there, you want to get your free coaching, take advantage of our live Q&As, just so much involved, guys. Make sure you check out the pinned comment for my group, where I may have left something special for those of you guys that got this far in the video. I might have left something special for you guys down there. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.